Thanks so much for tuning in to another edition of the Atlanta Small Business Show right here at ASBN.com. Bookkeeping and filing taxes can be tedious tasks for any business owner, and it's one of the great important things that we're going to be doing and focused on today. In terms of April 18th, it's right around the corner, folks. This year it's April 18th, not April 15th. So that is the tax deadline. It's quickly approaching. On today's show, we're pleased to welcome the CEO and managing partner of Manay CPA, Bree Manay, to discuss a few things that you need to know as we head into the tax season. So Bree, thank you so much for joining us on the show.
Thank you. Thank you for having me.
Sure. As soon as I say taxes, and most small business owners go, "Oh, that's right. I forgot about that." Right? We all get into trouble as small business owners when it comes to taxes, don't we? Myself included, right?
And yes, and ironically, it is right. Like at the holiday season, like everyone is in the spirit of
That's
holidays,
right.
Shopping for gifts and
That's a good
spending
point.
time for family, and then it's right around the corner.
It is.
And
it is.
yeah, we need to be
That's right. And
spending time on that.
And there's things, if you're going to be making purchases that have to be done before the end of the year in order to take that deduction the following year, you can't screw around with that. You can't buy it on January 3rd. It's like, I'm sorry.
No.
Now you got to take that on 2023's tax return, right?
Exactly.
So it is definitely something that we've got to be focused on as business owners. So as we close out 2022, what should small business owners and entrepreneurs be focusing on as we head into the tax season?
The first thing is definitely project your year-end numbers and put together some plan for sure, and then start working on your budget, and then include your team members. There's no I in team, so you need to just make sure you get all the inputs necessary for that decision-making process. And once you figure this out, you need to put together all your documents, be organized, your critical documents. And any changes and any new developments, you need to let your tax professional know so that they can, also plan, and then, don't make sure you, submit all the documentation in completeness. So,
right. So, and when you're talking about the documentation, let's drill down a little bit on that. Would that be things like your payroll, your payroll accounting and things like that, just getting it prepared?
Yes. Any new documentation that you can think of also, as far as like the new developments, that's, I want to emphasize that, but also of course your, W-2s, your 1099s, get ready to get all those documents together. And if you don't, receive them in the mail, you need to also chase them too, as soon as possible. And
then as a small business owner, you got to make sure that you're sending those out on all of your associates, right? And all of your vendors too. Some of the vendors that you're doing business with also have got to get
absolutely.
that, right?
Those are going to be all hitting in January, so you're going to need to, hit that deadline January 31st.
Yeah, it's a very busy time. There's no question about it.
January is like maybe even busier than April for us accountants.
Yeah. What are some of the things that you're recommending to small business owners to take advantage of before the year ends?
Yes, for 2022, I guess the most common one that I can think of is the meals expenses. We still have the 100% deduction on those for 2022. For any business meals, you can deduct 100%. And in 2023, starting January 1st, it will revert back to the 50%.
So take advantage.
Yes, it will revert back to the 50%.
Is there any rule of thumb as a small business owner? I know that I'll take people out, and we'll talk about business or whatever. And sometimes I take my friends out and we talk about business. Is that still eligible? Can I take that deduction if we've talked mostly about business during that?
If it's business related, then yes, you can still deduct the meal.
Okay, because I know a lot of small business owners have counted on that deduction over the years, right?
Yes, absolutely. Absolutely.
For sure.
And there's also some bonus depreciation rules that are going to be phasing out 2023.
Okay.
So 2022 is the good year to take advantage of the 100% bonus deduction for the eligible asset purchases.
Okay.
So it has to be, of course, a business-related asset purchase.
Okay.
And then you need to be putting it in service before the year end.
Okay.
And then get all your documentation, of course. And depending on your accounting method, if it's accrual, you don't have to pay it in cash. You can still deduct this.
So if let's say I buy a car, right, and it says 6,000 pounds.
It has to be over 6,000 pounds to be eligible for this 100% deduction.
Right. So if what if I lease it? Is it still eligible that I take the deduction?
Leasing is going to be a little different. It has to be
a purchase.
Considered, yes.
But if I purchase it and I finance the vehicle over let's say 6 years, I can still take 100% of the deduction now.
That would be correct.
Okay,
Yes.
that's pretty good.
Yes, you
Yeah.
don't have to pay a penny,
Right.
but you'll still deduct that 100%
Wow, that's
purchase.
big.
Yes.
That's big. So continue. Tell me about some of the others.
So if you had a good if you had a good year and then
Mm-hmm.
your business has a good amount of profits, I
Right.
would also recommend considering some employee bonuses before the year end, so you can take advantage of that deduction, and then increase your employee spirit and motivation.
And the idea behind that is that you're going to pay taxes on that money anyway, right?
Exactly.
So it's kind of like the government giving a portion, not all of it, but a portion of that to your associates.
Absolutely. If
Okay.
we can just give you an example here, like if it's a $100,000 bonus out,
Right.
then your cost is, in fact, if your tax rate is 40%, your cost is
Right.
in fact $60,000.
Right, right.
So and then
That's kind of good. Yeah.
yeah.
That's kind of
And in
good.
the meantime, you're increasing your employees.
Right. And that's got to be
motivation.
done. That check's got to be written before the end of the year, right?
That would be
can't
correct. Yes.
That can't be, the 15th of January,
No.
right?
Yes,
Okay,
it
yeah.
has to be before the year end. Another consideration is home office expenses.
Mm-hmm.
So if you are a small business owner and if you're on a Schedule C,
Right.
Consider exclusively using a space in your house.
Right.
But it has to be dedicated office space, and
Right.
it has to be exclusively used for the business purposes.
Right.
And then you can deduct those home office expenses. But if it's an S corp owners, they need to be a little bit more careful. So I would recommend there's some other rules applicable there.
Okay.
So they may need to check with their tax accountant on that.
And your business phone line's tax deductible, right?
Absolutely.
Your computer is tax deductible if you
Yes.
purchased a computer.
Yes.
I don't want to say fax machine because I'm dating myself. People listening go, what is a
They'll
fax
know
machine?
how
But if
old you
your
are.
business needs a fax
Yes.
machine, that's
Yes.
deductible. So anything regarding or related to making that income is a
Yes.
deduction, right? I think a lot of people
It could be
forget
your
that.
travel expenses. If it's business related,
That's
it's
right.
going to be tax deductible.
So let me
and
ask you a question. If I go to Las Vegas,
I knew there was going to be a question.
That's
coming out
right.
there.
That's right. So if I go to Las Vegas to attend a seminar, okay,
Mm-hmm.
to further my career, all right, is that whole trip deductible? The airfare, the rent-a-car,
Yes.
the meals, the hotel, the $1,000 ticket expense for 2 days.
Yes.
That's 100% deductible,
That's
right?
100% deductible.
Okay.
That's correct.
Okay.
Yes.
So I think there's some people that don't understand that. A friend of mine is like, well, you can't write that whole trip up. I'm like, well, if you went to learn something about your business, this individual was a realtor,
Yes.
and it was a real estate convention, the whole thing is tax deductible. And
Yes.
they said, well, yeah, but even if I spent a day at the pool or we gambled or whatever, that doesn't matter. It's still a tax
Yeah, in
write-off.
between, if you
Yeah.
do those, it has to be like it's like the purpose. It has to be business.
Right.
And then there could be some personal days, but the idea is like you were there, and then like the majority of the time you spent was for business purposes, and
Right.
then yes, you can deduct.
During these times, it's very important for small business owners to get with their tax advisors, right? With their CPAs and their accountants. Rather than
Absolutely.
doing things and going, oh, I shouldn't have done it that way. I thought that was the way to do it. Ask before you actually do the actual,
Absolutely.
right?
That's a mandatory rule in our firm.
Right.
We have to get together each of our clients.
Yeah.
And then put together a plan and then some tax saving strategies, because some of these, just like you mentioned, will be like not, you cannot take advantage of them. Hit
That's right.
January 1st.
Yeah.
So it's really important to come. You need to get together with your tax professional. And make a plan,
Right.
And work on it.
Sure. Let me ask you, if in the event a small business owner finds him or herself and says, wow, it looks like I owe $50,000 in taxes, okay? It's not the end of the world if you don't have the $50,000, right? You can get with the IRS and come up with a payment plan. They're pretty easy on that, right?
Yes. Depending on the amount, they may challenge, and you may need to fill out some extra additional forms.
Okay.
Because they want to look at all your assets, and so you may not just,
Yeah.
it may not be just so easy. But if the number is not that much, then definitely, you can. I mean, you can always apply for an installment plan.
Okay.
But then, depending on the amount, there might be some challenge. But
Right.
depending on your whole situation, you can. The IRS lets you,
Okay, we'll approve
with
something like
yes,
that.
yeah.
Yeah, it's also very important too that if in the event that somebody's going to get an extension, they got to do that by April 15th, right? Apply for an extension.
Yes,
But
but
after April 18th, they can't do it.
Right, but the extension does not give you the right to pay your taxes due, though. The extension is only for filing purposes.
Okay.
So you need to still kind of have an idea of how much taxes you will owe and make that payment before the deadline. And then you can still extend and then finalize your tax return after the deadline of April 15th, normal deadline, or 18th for this year. But it's very important. We've seen some clients getting hit by that. They were not understanding that important.
Yeah. So closing out this segment, this is an exciting time, obviously, to be in business, and kind of a crazy time, at the same effort, but because there's so many things going on right now. But first and foremost, this is the time that small business owners and entrepreneurs need to sit down with their tax preparers and say, look, let's close out 2022, let's get it right, and let's get prepared for 2023, right?
That is correct.
And the best time to prepare that for 2023 is not really in December of that year, it's in January of that year, right? To say, what's the strategy we're going to put together moving forward?
Yes, absolutely. We always plan for the last quarter of the year at least. If you haven't done anything, at least start working on it in October or November.
Right.
The worst case scenario. But I want to also point out, most small business owners, their business entity type is like single member LLCs,
right.
Partnerships, or S corporations, and they get like K1, their portion of the profits on that K1. Or the other scenario, the one member LLCs, they will report everything on their Schedule Cs. So what that means is all these profits are going to pass through their individual tax returns. So all of these entity types are pass-through entities, which means the taxes are going to be paid at the individual level, not on the business level. And that will also mean that you need to sit down with your tax professional to see the big picture, because all of those numbers are going to combine in your individual tax returns. All of the other, if you have a rental business on the side, or if you have a W-2 or your wife's or your spouse's W-2 comes into effect, and they may affect the tax rate that you will end up paying. So you need to look at the big picture with your tax professional.
Yeah, and for small business owners, that are watching today, this is something you want to take very seriously. This is the area that most small business owners, especially in those first few years, will get into trouble, is in the area of taxes. Well, you didn't set aside enough money, you didn't plan on it, you didn't think you were making any money. And therefore you say, well, at the end of the year, I didn't have a lot of money in my bank account. I didn't have any in my bank account. Well, that's not what your books say. So just because you don't have any money in your bank account doesn't mean that your entity, your business, didn't show a profit. You might be sitting on a few $100,000 worth of profit. It doesn't have to be in your bank account. So don't be shocked when somebody says, hey, guess what? You owe taxes on a whole bunch of money here. And you say, well, I don't, how could I? I don't have any money. I didn't think I made a lot of money. That's why you got to sit down in the beginning of the year with a tax expert to sit down, map out what the year looks like, and then if you can, make estimated payments, right?
That's a great point.
So you don't get caught.
Yes, Jim, that's a great point. The estimated taxes are going to be a lifesaver for many business owners. Normally, if you don't pay up to like 90% of your tax dues, you're going to get penalized.
Right.
And that picture may change throughout the year. So in the least possible way, you need to at least come together with your tax professional on a quarterly basis, and then before you make that estimated tax payment, you can adjust your payment depending on your profit situation, or if you're not doing that good, you may even lower that tax payment. But estimated tax payments really play a critical role in this tax planning. That's right.
They do. They do. It's much like if in the event that for an employee, for your employees, if they weren't putting taxes away all year, and then all of a sudden that person you're paying $50,000 a year to, and you're not taking any money out to pay their taxes, all of a sudden they have a $15,000 tax bill, and they're like, where am I going to get $15,000? So same thing happens with the small business owner, right?
Absolutely. Yeah. All the time.
That's
you see it all day long.
That's right. Bree Manay, CEO and Managing Partner of Manay CPA Accounting and Tax Services. These are the solutions that we want to be bringing you here at ASBN. Bree knows her business, obviously. Thank you so much for joining us in the studio today. We very much appreciate it. This is the kind of information, as I said, that we want to be bringing to our viewers to say, hey, wake up. This is something you got to pay attention to. It's not the fun stuff.
Yes.
It's the stuff that gives us some sleepless nights as
Right.
small business owners and entrepreneurs. But nevertheless, it's very, very important that we get it right. So,
Yes.
Bree, thank
It
you
was a
so
pleasure.
much.
Thank you so much for having me.
Yeah.
It was a pleasure.
Thanks for joining us for another edition of the Atlanta Small Business Show.